Hey there, Vinny from Project Frugal. Another 2 weeks, another $1,000, but unfortunately it's all been downhill. Let's check it out regardless. And here we go, here's Denise's portfolio, $58,613. Put another $1,000. We're just going to have a look at some stats here because we put another $1,000. The last time we did this video, we had $59,305. We've put another $1,000 in, and now the balance has gone down. Well, that's a bit strange. So overall, we've actually lost $1,702 in the space of only 2 weeks. Well, technically it's $702. We put another $1,000 in, so we're down $702. Well, $1,700 actually. Yeah, $1,700. Not ideal. Terrible thing. Terrible. And it's probably all because of the Israeli conflict that's happening at the moment. The market definitely doesn't like these sort of things happening, and that's probably what caused it. So as soon as this thing's over, maybe once the Ukraine thing goes away, who knows, the share market might go up again. However, we have made some purchases regardless. Probably haven't fared too well either. That's the way it goes with this portfolio, that's for sure. So a few little dividends went on there. We got Briscoes with $26.30. We put the money straight into Sharesies Save, as we always do when we get any dividends or any deposits. That's pretty much where the money goes. And then we drew the money out. Well, we had to put some money in for the Sharesies Save for the monthly fees, for the $7 monthly fee, so we could invest $4,000. Then we transferred some money out, transferring out $3,000, so we had $4,000 to spend at that point in time. We got some more dividends from the Fonterra. We got, what else did we get here? Then we started some purchases. We bought ANZ, we bought Westpac, and we bought the Warehouse. Now the Warehouse hasn't been performing well, but we did buy that because we've lost so much money on it. It's got to go up. Christmas is coming up. Maybe people are going to spend at the Warehouse. Probably not. Who knows? We'll just have to wait and find out. A little bit more dividends from KMD Brands, aka Kathmandu. Another $1,000 top up here. Another $1,000 straight into the wallet, and then into the Sharesies Save as it was, and another cash dividend there of $82.04. Looking at the application here, so the last business day, $37.30 loss. It's been pretty much going down for the last couple of weeks. Every day something has been bad. Every day's been bad. I think there might have been one day when we actually made $7 on this portfolio, but $7, not going to buy you. Well, we'll buy you a pie, that's about it. Anyway, things looking pretty grim here. So what do we got in the Warehouse there? We got $2,361.83. Overall, it's lost $1,500. Yeah, so if it was at break-even point, we'd be looking at close to $4,000 in that particular stock. However, it is paying out in December, and the reason why we bought it is because it's paying out in December. And we're buying it pretty much, hopefully, at the lowest point in the market. So if it does go up, we're buying the stocks at $1.71 roughly, and we've paid overall $2.97 for each stock because it was valued a lot higher not so long back in the last couple of years when it actually had made a profit, but not looking good at the moment. However, that's the way it goes. We're not going to be selling it, we'll just be holding it. We'll get that $102, reinvest it back into the portfolio. In terms of ANZ Bank, there was no change with that. So the Infratel, we put in $1,020. What's it sitting at the moment? There we go. It's $9.96. We've actually lost $24 in the last 2 weeks. Woohoo! Yet another win. Another great stock pick by... Thanks, Denise. Good stock picking. Is she really picking the stocks? Well, you'll have to think about that for yourself, won't you? So according to this, $4,000, almost $4,400 in the red. In the red? Yeah, in the red. Never mind. It was at $2,700 in the red 2 weeks ago. Now it's $4,300. So literally $1,600 down the tubes on the stock market. But I did watch an interesting video the other day. It was based on a guy over in the US, and they had $1 million portfolios essentially. So when they have a bad day or a good day and they lose 1%, they got $1 million in there. Essentially their stock portfolio goes up or down by 10,000. He said it went down by 13,000, so clearly he's probably got roughly around 1.3 million worth of dividend stocks. And that's US dollars, not piddly old New Zealand dollars. You gotta be brave, you gotta roll with the punches. You know, imagine getting $10,000 in one day and then the next day you lose $10,000, or anything worse than that, maybe $20,000 up or down. It's very volatile when you're talking big numbers here. This portfolio, 10th of the size of that, so, well, not even that, 5% of that size. All up with the portfolio worth around $58,603, a 1% gain, $586. If it goes up 1%, $586 roughly. If it goes down, that's a $586 loss. When it gets up to 100,000, we have a 1% day. Well, that's $1,000 up or down. That's okay. That's the way it goes. Hopefully there'll be more ups and downs. Jumping into the dividends, October. Yep, biggest high in payout month. Well, the biggest high in October, that's for sure. So September was a good month, $624 for this portfolio, $486. There's no more payouts to come in October. There's literally probably nothing coming in November at this stage, not that I can see here anyway. Maybe there might be something if we're lucky. However, December should draw in roughly about another $400, so we should be getting close to $2,800, maybe, yeah, $2,800 I'd say. So it's over $50 a week in potential dividend income, well, an actual dividend income that we get paid for this portfolio. So even though the total balance is negative $4,400, something around that mark, we are getting $50 a week from the portfolio. So if we buy no more stocks ever, we just hold the stocks, assuming these companies don't go out of business, we make $50 a week, every week, essentially for the rest of our lives. $50, not much, but it's better than nothing. Let's go and have a look at the NZX 50 charts. You can see the week's been down, the fortnight's been down, the month has been down. You can see this major dip right here at the end here. Ever since the Israeli conflict started up, it's really gone downhill at a rapid rate of knots. When the market bounces back, some of these gains will look really good, and we'll wonder what all the fuss was about at that point. It's just a case of holding on to the stocks, not selling them, not panicking, and staying the course. And here's a chart of ever since we started this particular portfolio and how it's fared. So we've had 63 long fortnights of investing $1,000, $500 and then $1,500 in the first couple of payments, and then essentially $1,000 everywhere since then. If the portfolio was to be break even, it should be following this green line here. Unfortunately, it's not breaking even. This is where things went belly up, roughly around here. When's that? Week 20, or fortnight 20 rather. So when's that? Well, it's a wee while ago now, so 80 odd weeks ago, so a year and a half ago, things started going belly up on this portfolio. It almost recovered there, and it had a major drop here, another major drop here. It started recovering over this period here, and then, yeah, we've got this major downward spiral here. Excellent. So one day we're going to get it back up to the green line and over the green line. It wasn't that much over the green line to start with, to be honest. If the COVID thing hadn't happened, this portfolio would probably be doing quite nicely. But that's the way it is. There's no point crying over spilt milk here. So you can see down on this chart here, that's the break-even point here, this line down here. But yeah, we're not even close to that, unfortunately, at the moment. And who knows how long it will take to get over that line, or if it ever does. Who knows? I'm sure it will. Based on historical data, 7% a year is what it's supposed to turn out, or what it's supposed to appreciate in value. Clearly it hasn't done that ever since we've been doing this for the last 63 fortnights, which is how many weeks is that? That's 126 weeks. That's quite a long time. That's over 2 years now. We've still got a wee way to go. We've still got another 37 fortnights, which is over a year, and we'll get up to the $100,000 worth of investments. The question is, will this portfolio actually get up to $100,000, and will we actually make any money from it? The good news is, if we do get up to $100,000, let's just say it's break even. Like I say, we've got the dividends coming in every week, on average, $50 a week. By the time it gets up to $100,000, we'll be looking at least $100 a week. Should be roughly around that much. $100 a week. We've worked for it, we've earned it, and that's what we'll be getting paid out. Well, that's the way it works out. That's all the time we've got for in this one. That's all you need to know. She's been a downhill run, but never mind. We'll keep on investing. We'll get to that 100,000 and we'll carry on. See you later.